Hello guys, again this is binary options trading with the head and shoulders pattern. We go with the second part of our analysis. On the first part we lay down the rules of the head and shoulders pattern in the sense that we described a bit the theoretical part, but let's look at the challenges of trading binary options with it and the challenges to today's market, because as you know today's market is almost entirely automated in the sense that the orders, the buy and sell and close orders on the most of financial products, these orders are executed by trading algorithms or programs or supercomputers that execute thousands of trades per second or per millisecond, and therefore the patterns that, or the classic patterns, have a tough time to survive. Yet they do. Now, as I mentioned a bit earlier in the first part, for a head and shoulder pattern, you gotta have either a bullish trend, then the pattern forms and the bullish trend is reversed, or you have a bearish trend, the pattern forms and the bearish trend is reversed. In that case, that's called an inverse head and shoulders. So on the euro US dollar here, we see that the market forms a bearish trend here. So let's make this one a bit different. A bearish trend here, and then the market forms what? Forms a head and shoulders. How come? Well, you look for a consolidation area. The market consolidates a bit here. Then what would be the head of it? At this very moment, we don't know here. We don't know that the market will form a head and shoulders pattern. We have a spike lower followed by an aggressive move higher that ends around the same level there. And then another consolidation level forms. By the moment that the market reverses, so this will be the head, the move lower and then the spike higher to the original place. From that moment, we know that a possible head and shoulders, inverse head and shoulders, will form here to reverse the previous bearish trend. So what do we do now? Well, now that we have the move higher here, all we gotta do is to take the neckline. So we take a neckline and we connect, or we drag it from the left shoulder here, until the spike that we had here. That would be our neckline. So neckline we project it here. And then the consolidation that follows may take various shapes. It doesn't mean the consolidation on the right shoulder, it doesn't mean that it will look exactly like this one. It may take various shapes. But what binary option traders do, or what binary option traders should do, is to use the information from the left shoulder, the information here, to trade on the right shoulder, and then of course to trade the pattern moving forward. Now how come? That's very easy. The thing to do is, or the first step to do is to copy the neckline. We already know the neckline, right? So to copy the neckline as it is, and we project it, keeping the same angle, we project it from the lower point in this case, or the highest point if you trade a head and shoulders, not an inverse one, but from the lowest point on the left shoulder here, which we already know. Remember, we draw the neckline right here. So what's on the left side, we already know. So we take this one and project it from the lowest point on the head and on the left shoulder here. Now that would give us plenty of opportunities to trade binary options, or the striking price for a binary, for a call option. Remember, we want to buy a call option here, and that would be a place to deploy the call options here. Now, of course, as for the expiration date, you gotta be aware of the time frame, this being the daily chart. While in this area here, the call options that are being traded, they don't have much of a success. You look at the neckline here as a classic support and resistance, right? So for the first time that the market came into support, it bounced. Then the support was broken, so it becomes resistance, and then the market breaks the resistance and comes back to the neckline. So the resistance turns into support. That's a perfect place for a call option, and you may trade it with being on a daily chart, I would never advise to have an expiration date at the end of the day, but you go for the end of the week or even for the end of the month, if this would be in the last week of the month or in the last 1.5 weeks and so on. So that would be a great place to entry for the binary options traders on the call side, of course. How about the measure move? Well, the measure move confirms the pattern, remember, which comes as an interesting fact or something that traders, especially binary options traders, must consider. This would be the measure move in the sense that this is the distance from the neckline until the lowest point of the head. You project, or we project, the measure move here, and then the idea is that the market comes and forms, or when it breaks, after it breaks higher and it goes for the measure move. This would be the measure move here. Now, as you can see, this is not random, because if you project the measure move here, that the market goes for the measure move here, meets a terrible resistance at it, and then finally it breaks it. So at the moment that the neckline here is broken, it's another place to go for a call option somewhere around here. You pick the expiration date, and then you see if market indeed reaches the measure move and what it does. We see here that on the measure move it forms a consolidation area, which is a very good sign of probably a triangular formation, A, B, C, D, E, or a bullish flag or something, and then it breaks higher and then comes and retests the area. Well, if this area here was supposed to be, or if the measure move here was such a strong resistance on a daily chart, then by the time that the market broke it, of course, and on a retest, it's a support, and that would be another place to go and trade binary options. But keep in mind what the head and shoulders pattern means. The head and shoulder means that the previous bearish trend was reversed. It means that bulls here are in control. So if you go and use from that moment on, from this moment on, if you used continuation patterns, or if you trade with moving averages, as we explained here in previous analysis and so on, then you will find useful staying on the right side of the market. Knowing that this is a bullish reversal and a bullish trend on the daily chart, it helps very much going on the lower time frames and trade on the hourly chart and so on, with various other trading techniques, as you will end up being on the right side of the market. I will end up with automated trading as well. These patterns are spotted by robots or trading algorithms. The bigger the time frame is, let's say, the more trickier to trade is. Why? Because when the market takes time to consolidate on the left shoulder and on the right shoulder and so on, especially on such a time frame, that it takes a few months. For example, this one, it took from November all the way to April, so we talk about 5 or 6 months, which is a lot of time. And it's difficult to miss this kind of a pattern, which can be both a blessing or a curse. Why? Well, look at this bullish trend. So we have a bullish trend now here. And then the market, look at what the market formed. The market formed the so-called head and shoulders now. Head and shoulders now. Right? If you take a neckline here, then you see what? You see a consolidation here. A spike higher, followed by a spike lower. And then you have your consolidation on the right side here. And of course, at the moment that the neckline here has been broken, all the FX traders and so on, they went short on the short side. But trading algorithms know that this pattern here was visible. Everyone discussed of the head and shoulders pattern and so on. And then by the moment that the market broke here, retail traders were caught on the short side, and then the algorithm simply squeezed them high. As a rule of thumb, write it down that the uglier the head and shoulders is, like here, the more accurate the pattern will be. In the sense that if you have a beautiful head and shoulders or a potential head and shoulders like this one, everyone will notice it, and eventually the market will go and invalidate the pattern. Thank you for being here, and the two articles that come with this analysis will discuss all the aspects, both from a technical point of view, the first part, and from a practical point of view, the second part related to this video. Bye bye.